Good morning, trading world. It is January 31st, 2023, and this is my pre-market outlook and technical analysis for day trading the markets. Now, if you have followed me for a while, you know I track market makers' expected move and implied volatility. Check this out. Starting the week, Apple's expected move for the 5 days of this week was 6.97. One trading day has passed. So with 4 days left, the expected move moved up to 7.026 at the close yesterday. The same happened for a number of stocks I have positions on, like Starbucks. It went from 6.227 to 6.826. And Caterpillar went from 12.991 to 13.055. The next signal to me is big. I track a lot of things in a spreadsheet. And just to kind of show what's going on, I track the VIX and the different time frames of VIX. And right now, the 9-day VIX at 22.42 has gone higher than the 30-day VIX and the 3-month spot VIX. With VIX contracts starting the beginning stage of contango, this is starting to say trouble is here right now and not down the line. If there was an earthquake coming, these changes would be the small tremors beforehand that no one really pays attention to. Another thing that was crazy to me was the disparity between the ES futures and the SPY's outlook. The futures had a bigger bearish bias, while the SPY had a smaller bullish outlook. The difference in outlook doesn't surprise me. It happens because the futures contract has more data points to measure. But when the difference is like a mile wide, it's something to take notice of. This is evidence pointing to the alternate thesis on the SPY today as well. With that being said, let's get to the key levels to watch for today. Let me bring those up. And here we are with the key levels of the day, starting on the resistance side. We have our jack resistance at the 400 to 401 area. Both of these levels are going to be key today, especially this 400 to the 401 area breaking the previous close. It's going to be key to what happens today. Then we have our queen resistance area 402 to the 403 area. And then our king resistance area 404 to the 405 area. On the support side, we have our jack support at 398 to the 397 area. Queen support 396 to the 395 area. And then our king support 394 to the 392 area. And as I said yesterday, I was looking for a target of 398 yesterday, but my exact words were a target of 398 with some overshoot. Now, because we have a rise in the VIX, the 9-day or short-term VIX being higher than the 1 month and 3 month spot VIX, to me, that overshoot can become much larger. And that prompts me to look for a target down around this 395 area and maybe a little below. And the sad part is that we may not even be able to catch some of that, because there's a chance that a lot of that move may happen overnight, and then with it being the first of the month, things may start to get bought up out of that area at a time that we can't get to it over here in the U.S. Options market period. So there's a slight chance that that happens. And then there's a chance that we continue lower at the open, or open up lower, and then a big run up from there, still giving us a chance to close some of those positions. So whatever happens, I will leave some runners going into tomorrow, but I'm going to try to not necessarily close, but I'm going to roll positions out. And that's something that I do in these time periods. If I'm short a position, instead of closing that position, I'll roll it out in time and stripes down, so that I can lock in money, but I still have a short position on the board. Because what happens when we get to these volatile times like this, to me, it seems only a matter of time before we get a spike lower or reach that lower position. So I'll take out profits by rolling down, but never closing anything out. And so it gets to a point where I have a large number of short positions on the board that are already paid for. So if it does or doesn't get to me, I'm okay with it. But on the chance that it does, it's money that it's almost like free money. So that's another thing that I do in these periods of high volatility. Let's get to the outlook. The main thesis for today is bullish, closing above the 459 with a projected target higher between 400 and 405. The alternate thesis is bearish, closing below the 459 with a projected target low between 399 and 392. Remember earlier I said the disparity of the outlook on the ES and SPY bothered me. And I'm using that as further evidence that we're in an alternate thesis day. So there's going to be big movement today regardless. But with the futures pointing, or the outlook being the way it is, I see us, a spike higher and then a revisit to lows, to overnight or pre-market lows, and maybe even beyond. So keep that in mind for today. The main channel that we're in is from 397 up to 416. The main channel below is 397 down to 379. Yesterday, market strength and bread at the open gap down and shot up right out of the gate. then fizzled out the rest of the day. I expect strength and better to get pinned lower until we reach a price target somewhere between 398 and 395 on the SPY, or we could pretty much have the same same as yesterday play out, where we start lower, spike up, and then at some point fizzle out and move lower from there the rest of the day, and probably closer to the latter. Give me just a moment while I make sure, check whether we have harmony or dissonance. And as of right now, there is dissonance between the technical side, which is almost at a 50-50 level, and then the quant side is bullish. And for me, with the way that volatility is starting to spike, there's no telling where we can end up on the board today. Whether it would be, let's see what the expected move right now is on the SPY, whether that's ending almost 3 points lower on the day or 3 to 4 points higher on the day. Volatility is definitely starting to rear its ugly head. So we have to be careful. But I am looking for us to go lower at some point and revisit the pre-market on overnight lows and beyond. Let's get to the scenarios of the day. All right. Our first scenario is going to be our expanded range day structure. We can have an initial push up to resistance before going back to revisit lows of the morning and consolidating for a while with both swings up and down. That resistance right now seems to be that queen resistance, 402 to the 403 area. And those swings or spikes, they could continue into the overnight session, giving us a rather decent sized gap down tomorrow. So again, that is our expanded range day structure. All right, our next scenario, which the first two are pretty much neck and neck, is our trend day down, meaning we open, gap down, and start with a push back up toward the previous close represented by the blue line. We find resistance on or before that previous close, then begin the downtrend for the day. We usually find midday chop around either the possible queen or king support area. And usually, a lot of times we get start the second part of the day with what's like a head fake, where it looks to continue the primary trend of the morning, and then we get a rally up into the close. But with volatility, if volatility continues on its path up, what's more than likely would happen, instead of getting that rally into the close, we're going to actually continue even lower through the close. And that's definitely dangerous territory. All right, and here we are with the last scenario, which is going to be our rounded reversal day type structure. We could get a continued push higher toward the Jack or Queen resistance area and find our midday chop around either the Queen or King resistance before going back down with the same energy or force we went up with the first part of the day. Now, this is our rounded reversal day type structure. I do have to warn you, we do have a vice versa alert on today, and that vice versa alert just says we could come out and continue lower right out the gate. Find our midday chop around either the Queen or King support area, and then push up the second half of the day with about the same amount of force as we went down with the first part of the day. Those are the scenarios that I'll be planning for. I am seeing a divergence, and I believe this is in correspondence to FOMC. So the bulk of that divergence happened overnight, so I'm not sure how much trust I can put into it yet. But once I reach the target that I was looking for, which was 398, and I've kind of moved it. I'm kind of thinking closer to 395 now. That was going to be a point based on what indicators were doing that I would like to put on some type of long position, whether it's some bull put spreads and even some calls right now. I'm not against calls right now, because this next move that we're going to get up, it's going to happen so strong that the VIX, the juice that usually eats up calls when we're at a high level, it's going to either stay the same or grow. And that may give us a chance on the calls to where it doesn't take as much of the profits in a sharp move like I'm expecting. So those are the things that I'm preparing for. This is a highly risky time. So you definitely want to have your risk in order. As I say every day, your most important job as a trader is to protect the capital that you already have. And we do this by knowing and understanding the risk that we have on in each position, and we manage that risk in accordance to our account size. Please take heed to that. Be very careful. I hope this helps. Wishing you a positive trading day. Let's go out and make it a great one.